What's up, guys? Feed you information here. So we have our balance sheet analysis video, and Apple is up first. As you can see, I'm gonna have an emoji fruit for each of the stocks, just so you know which one we're on. You don't get too lost. So Apple on March 30th, 2019 is the date that the last balance sheet came out. And cash balance of $37,988,000,000, total assets of $341,988,000,000, total liabilities of $236,138,000,000. Now the assets over liabilities ratio comes out to 1.44. If it was a 1, it would mean that the assets are equal to the liabilities, so anything after that is just extra percentage. So assets are 44% larger than liabilities. Short/current debt is $10,505,000,000. Long-term debt is $90,201,000,000. That makes up 42.6% of total liabilities. And if they wanted to, combining with their cash and right here their retained earnings, they could actually pay off all of this debt. So whether they do or not is up to them, but it would be kind of risky to use their assets to go ahead and pay it off, because as you see, they're only 44% larger than the liabilities. So stockholders equity, as I just said, the retained earnings is $64,558,000,000. And then going on to the cash flow, this isn't part of the balance sheet, but it also comes out the same date. So it's something that if the company does pay dividends, I'm just going to add it in. $3,443,000,000. So they are doing pretty good at paying people their dividends. Alibaba up next with a nice little pineapple emoji. As of March 31st, 2019, we have $189,976,000,000, guys, for that cash balance. Freakishly large. Total assets of almost $1 trillion at $965,076,000,000, and total liabilities of $356,493,000,000. Assets over liabilities comes out to 2.7. So as I said, that 1 means that they're even, meaning that the assets now are larger by 170% than the liabilities. The short/current debt, we have $15,110,000,000, long-term debt of $111,834,000,000, and that makes up 35.6% of the total liabilities. So they could easily pay off all this debt, guys, with simply their cash balance. That's insane to think. The stockholders equity, we have retained earnings of $262,954,000,000. So with the retained earnings, if I didn't already say on the last stock, is basically you can reinvest it back into the company, or you could just simply turn it into cash. You could make it an asset. You could do whatever you want with it, basically, but it's the retained earnings from the investors that have put in the money. Cash flow, we have a dividend payout of 0 because it's not a company that pays a dividend. On to stock number 3, we have a nice little pair from Microsoft. In March 31st, 2019, they have a cash balance of $11,212,000,000, total assets of $263,281,000,000, total liabilities of $168,417,000,000. Assets over liabilities comes out to 1.56, so the assets are 56% larger than the liabilities. Short/current debt, $7,976,000,000. These are some really large numbers. Long-term debt, $72,557,000,000, and that makes up 47.8% of total liabilities. So they're not looking as good as Alibaba or Apple in terms of like the comparison, but even Apple isn't looking that great from an asset to liability standpoint, so it's understandable. Stockholders equity, we have retained earnings of $18,338,000,000, and then cash flow, the dividend payout is $12,699,000,000. So they're really doing well paying out that dividend. Disney, 3/30/2019 with a nice little kiwi emoji. The cash balance is $10,108,000,000. Total assets of $214,342,000,000. Total liabilities of $108,900,000,000. And assets over liabilities comes out to 1.96, meaning that the assets are almost 100% larger than the liabilities. Short/current debt of $17,762,000,000, long-term debt of $37,803,000,000, and that makes up 51% of total liabilities. So once again, they couldn't even use their cash balance to pay off the short/current debt. However, with that retained earnings, they could squeeze in paying off both almost. They would be off by about $3 billion. Retained earnings of $41,212,000,000. And then the cash flow, It did say that the dividend payout was 0. Though they are a dividend company, very few companies pay dividends 100% of quarters. So they simply just missed on this quarter in terms of paying the dividend. And not like missed as in, oh, they didn't hit the correct number. Like they just didn't pay a dividend this quarter. So sorry if that confuses you with the whole miss thing. Nvidia, we have 4/28/2019, so basically April 28th. And we got some cherries as the emoji for this one. And the cash balance is $2,772,000,000. Total assets of $14,021,000,000. Total liabilities of $4,317,000,000. And the assets over liabilities is 3.24. So you guys already know it's going to be a very large number. Assets are 224% larger than liabilities, guys. Short/current debt, 80 billion. And long-term debt, 80 million for the short/current debt. And long-term debt is $2,474,000,000. That makes up 59% of total liabilities. And right now, it does look like they could easily pay off their short/current, but the long-term debt, they could pay it off with the cash balance, but, no, they couldn't. Could they? Yeah, because they have 300 million, it's only 80 million. Yeah, so they could pay it all off with their cash balance, but whether they will or not, of course, we don't know. Anyways, stockholders' equity, that's a bit more money that they could use to pay off the debt. Retained earnings of $12,862,000,000. And then the cash flow, we have a dividend payout of $97 million. So smaller, but they have a pretty small percentage dividend that they give out. So it is more of a growth stock. Anyways, General Mills, we have 2/24/2019 and a watermelon emoji. Cash balance of $547,100,000. Total assets of $30,285,800,000. I hate when it's the three sets of numbers. Total liabilities of $22,487,500,000. Assets over liabilities of 1.34. So basically assets are 34% larger than the liabilities. Short/current debt, we have $1,407,200,000. And long-term debt of $11,642,600,000. So obviously their cash balance couldn't really clear either the short or the long-term debt, and that's a big problem with investors right now, is like this company is really in the shithole in terms of debt. So hopefully they can pay this off. But anyways, that makes up 58% of the total liabilities. A lot of this came from the Blue Buffalo acquisition, but hopefully they can pay that off in the long run. I believe that they can. Stockholders' equity, we have retained earnings of $14,724,500,000. So that could definitely pay off all of the debt, which is like, why don't they just do that? But I don't know. Cash flow, we have a dividend payout of $294,500,000. So they are paying a decent little chunk of dividends. And EA, we have 3/31/2019, a nice little strawberry emoji. They have a cash balance of $4,708,000,000, total assets of $8,957,000,000, so just shy of $9 billion, and total liabilities of $3,626,000,000. So the assets over liabilities is 2.47, meaning that assets are 147% larger than the liabilities. Short/current debt is actually 0, which is great to see. Long-term debt is $994 million, and that makes up 27% of total liabilities. So they could definitely just pay off all this debt, and hopefully they decide to. Stockholders' equity, we have retained earnings of $5,358,000,000, just more money to pay off debt or reinvest back into the company. And then cash flow of 0. Cash flow, we have a dividend payout of 0 because they don't pay a dividend. Two more stocks, guys, bear with me. Activision, we have March 31st, 2019. We have some grape emojis, and we have a cash balance of $4,696,000,000. Total assets of $17,948,000,000, and total liabilities of $6,352,000,000. The asset over liabilities is 2.82, so the assets are 182% larger than the liabilities. Short/current debt, we have a 0, and the long-term debt, we have $2,893,000,000. That makes up 45% of total liabilities, guys, and they could clearly use that cash to just pay it off. But their stockholders' equity, we have retained earnings of $6,757,000,000, just more money to have. And did you notice they also have no debt for that short/current, as I said? So right now, all the gaming companies have no short/current debt, all three of them. That's really good to see. But anyways, the cash flow dividend payout is 0 because, of course, they don't pay a dividend. Anyways, we have Take-Two Interactive, which looks the nicest out of all three of the gaming stocks. 3/31/2019, we have a nice little peach emoji and a cash balance of $826,525,000. Total assets of $4,243,065,000, and total liabilities of $2 million. Oh, I messed up there. Apologies. Extra zeros. Let's get these extra zeros in here real quick. Sorry to make you wait. It's already a 10-minute video. Lord have mercy. Anyways, we have total assets of $4,243,065,000. Total liabilities of $2,202,485,000. Like I said, those triple sets of numbers suck. Assets over liabilities is 1.92, so the assets are 92% larger than the liabilities. Short/current debt is 0. Long-term debt is 0. That makes up 0% of the liabilities. That's why I say that this is the best one, because they don't have any debt. But at the same time, you could argue, while the other two have higher cash balances and they're bigger, but Stockholder equity, we have retained earnings of $877,626,000. And of course, the cash flow dividend, there is a 0 because they don't pay a dividend. So that is all 9 of the stocks. If you guys enjoyed this video, make sure to throw a like. And if you haven't already, make sure to subscribe for more videos like this. But especially smash that like, because this helps me to know that you guys enjoy videos like this. If not, I probably won't consistently make videos like this, because I just feel like it's a bit too much. But I love to do this, and I love to speak and preach about these numbers because they do matter. It's a balance sheet, and it helps run the company. Anyways, thank you guys so much for watching. Video information out.